Good afternoon, everyone, and welcome to Nivesh Mahakumbh 2022. In this part, over the next 45 minutes or so, we are going to try and decipher the way forward for women investors and what they should keep in mind as they approach investing, whether for the first time or whether they are looking to deepen or better understand the way their relationship with money works. So, just taking a step back and putting in some context for all of you. Now, women in India, we all know, have had a complicated relationship with money since time immemorial, right? Patriarchal conditioning through generations continues to color the way we women think about money management, very often balking at the idea of managing finances even today. Consequently, many women, despite being financially independent, continue to relegate money management to their fathers, brothers, partners, because somewhere there tends to be an ingrained perception that in the matters of the wallet are better handled by men or that they know better. However, a welcome change is underway with an increasing number of women realizing the importance of being adept at managing their own money. The pandemic has also led to many more women acknowledging that financial planning is very important, not only for unforeseen circumstances, but just in everyday life too. Another factor that makes it cumbersome, perhaps, for women to deftly manage their finances is the fact that financial products really seem to have been designed keeping women in mind and their needs. The unavailability of products that suit their needs or work for women very often tend to create an atmosphere where the industry or the financial industry itself not very inclusive. So now in our panel discussion, what we're going to try and do is decipher how some women have made it their life's mission to better manage money, not just for themselves, but for all of us out there. Let me introduce the panel. Ms. Shruti Agarwal, the founder of StashFin, Deepika Jaikishan, who's the founder of Basis, Lavanya Pashicha, who's the CEO of Zivami, and Sunaina Dukuna, who's of Aditya Birla Sun Life Mutual Funds. So thank you very much for joining us here today and welcome. So let's get the ball rolling. Let me start with you, Shruti. I think before we discuss the broader construct of how women approach money and what they tend to do, which is different from the way men approach money, let us give us a sense of your own experience with money management and give us a glimpse of what it took for you to create Stashfin and your learnings along the way.
Sure. Thanks, Hina. You know, all the things you mentioned that growing up investing was all male dominated. I don't think I grew up in an environment which was any different. Even today, when you look at the advertisements on TV, it's all driven towards men. And that's a similar background I grew up with, which my parents were very, very clear that they wanted to bring up independent women who do not depend on a third party for their investments or their future. So we're three sisters and a brother, and all three sisters are quite independent, and so is my brother. I'm a chartered accountant, I'm an investment banker, studied at Columbia University, and studied finance through and through when I did that. And throughout my journey, I've had female role models where, talking about money, talking about investment has not been a taboo. It has been, it has been a great platform for me to learn from the US and bring it back to India and understand what you can service and how you can service those who are underserved in the country. You know, Stashfin is a large company. We underwrite close to a million customers a month, and of which only 10% of them are women. So whether it's salaried, unsalaried women, are just not taking charge of their finances. It's just about, they are bogged down by the daily routine of their homes, taking care of their houses, their children, their parents, that they're not thinking so much about their future. And for me, having two children, it's very, very important because I understand money and I come from that industry. Planning for contingency, especially during COVID, it's been very important. Planning for healthcare, planning for term life insurance, working towards your own employee provident fund. All these things have taken a big part of a step back in understanding what I want in the future. whether buying a new car or, during COVID times, a lot of us invested money in home improvement because home became office for pretty much all of us. And looking at the pictures on the screen, I can pretty much tell that everyone's still working from home, and it's here to stay. The hybrid model is here. So our requirements, our homes are really our offices now. One should always think about a 5-year plan, a 10-year plan. And as I'm growing into that mold of educating a lot more people in my sphere at work, we do talk about a lot of it very openly.
Right.
Women do not actively participate in the stock market, which I understand, because it's something which it's more about time and interest. And
Correct.
women probably feel better putting their money in an FD or buying a piece of gold, which they will gradually appreciate, or something in mutual fund, which gets pegged to the Nifty anyway, and you don't have to worry about it. But as we all are growing into this mold of taking care of ourselves and think about ourselves first, I think it's really important of all the things I mentioned. Have a 5-year plan, have a 10-year plan. And that's what I've been doing for myself. That's what I've been doing for my team, introducing healthcare
Right.
plans. One of the things which we introduced is, even though if your husband has a healthcare plan, make sure you buy one for yourself, because
Right.
during COVID you
Right.
could cover your parents and he could cover his parents. The liabilities shared. So this is some initiative we've taken very, very actively and has resulted very well for us.
Great. Thanks, Shruti, for that. And you brought up a lot of points, which I'm sure we'll discuss in more detail as we go along. But Deepika, let me come to you next, right? Give us a little bit
Yeah,
of your own journey, your own learnings personally on money management, and give us a sense of whether you believe that women who don't have an independent source of income of their own, and that becomes a large sort of impediment in their
yeah,
relationship with money, and even perhaps actively participating in decision making around family money, right? That feeling of, this is not my own, I have not earned it, and therefore do I have a right to even speak about it? Or to
yeah.
you on that, Deepika. A little bit about your own journey, and then if you can shed some light
Sure.
on women's relationship with money if they don't earn it themselves.
Sure. So, hi everyone. I'm very excited to be a part of this conversation. I know it's going to be a very interesting next half an hour. So, I'm the co-founder and CEO of Bases. Bases is a financial services platform, a fintech catering to urban, professional, working women. Whether you're salaried, whether you are you're a consultant, in whichever capacity you're bringing money home, or even if you are a homemaker with access to some income which you can choose to invest. So very different audience that we're catering to from the question you just asked us, right, Sarna? But I think if we've learned anything in the last 2 years, it's the fact that irrespective of whether you're earning, you're financially independent in that sense of drawing an income or not. Not being involved in the family's finances is not an option anymore, right? The reason we also started Basis 2 years ago, I'd been working in fintech and wealth management for about 12 years by then. And my co-founder, at the time that she was going for her master's to, an Ivy League school, realized that, like, as a good student, she had everything planned out, right? Like, it checked every box except how I'm going to pay for this education. And these are still privilege problems. This is still a problem of figuring out how I'm going to pay for an Ivy League education. But these problems are prevalent in every home at a very different scale. Oh, I want to upskill myself. Hey, I took a break from work. I didn't work for like 6 years after my child. I don't know how to come back. I know it's going to require me to like become up to date with a whole bunch of things. It's going to cost money, but I don't know how to do it. So while we're talking of women who have cash in hand or don't have cash in hand, I think not being involved is not an option. For instance, at Basis, we run a community of over 100,000 women, and this was back last year. While the second wave, a woman just put a message in the community saying that, hey, my husband is in the hospital. He has a health insurance policy. We have the money. We have money in the bank. We have various insurances in place. I don't know how to access that money because I've never done it before, right? So that is also a huge problem. Like, you may not be bringing money home, but I think if there's one thing we've learned from our mothers or grandmothers who probably didn't work, is that they were very actively involved in financial decisions at home, including with school we went to. Right, it wasn't an independent decision that somebody else made on their behalf or our behalf. It was a joint decision evaluating various points. So I, for one, do not believe that women who don't bring money home are to be discounted in any way. There are very
Absolutely.
many ways to get started. I think fintech and financial services has only like resulted in access, right? Like there's so
Correct.
much access to what Shruti was talking about as well. Like these conversations have become a little more open. I think as women, we're still very guarded. If we're not going to ask questions, if we're not going to be involved in conversations, no one's going to involve us. So we need to start somewhere for ourselves.
All right. No, valid points. I guess, access to information and education for sure has really opened up, right? And I think you brought up a wonderful point of there being communities now where women can feel more equal, right? Even if it is in the notion, in the sense that everyone is learning together, and there is not anyone here that is going to think, or look down at me because I don't already know something. I think that goes a long way too. Sunera, coming to you, a little bit about your own journey, if you would like to share with us, and also give us a sense of, what you have seen in your career as some of the mental blocks that often tend to hold women back from more actively participating. So we spoke of some constructs outside, but some blocks within ourselves that hold us back.
Hi, good afternoon, everyone, and lovely to be part of this panel. I co-head fixed income at Aditya Birla Sun Life Mutual Fund. A little bit about my journey. I think I was very privileged to be born in a family which had great emphasis for me and my sister on education. It was, I think, drilled into our heads very early on by both my mom and dad that we had to be independent, financially and economically independent, as well as as we grew up. And for that, a great emphasis had to be laid on getting the right education. So after completing my MBA at FMS Delhi, I joined the Aditya Birla Group. It's been 18 years, and here I am
Wow.
today. So you were asking about, and I think, the previous speakers also mentioned this. The last 2 years have really brought home how important, discussing finances actually is, particularly in the very unpredictable world that we live in. With this pandemic, we've seen situations where people suddenly have had to, women suddenly have had to take over the reins of managing money. And these women, some of them very highly educated, very very doing very well in their fields, non-financial fields maybe, are absolutely unaware and taken aback, because up till now those conversations have not happened within the family as to what our net worth is, what our investments are, where they are, what do we have, health insurance, how much health insurance. So those basic conversations have actually not happened at the family level. And hence, when women suddenly have to go ahead and take over the reins of managing the money in the family, the investment in the family, sometimes we've seen this actually being very difficult, and it comes, of course, at very difficult stages. So having those conversations right up front, is extremely important. And I think maybe that starts not only at a later stage. It needs to start right when when you're small and when you're children. So I think one of the previous speakers spoke about managing and looking at the finances for her kids. That's something I've also started with my 7-year-old son. I've started explaining to him and teaching him the basics about investments and managing money, etc. And I'm doing that with my nieces as well. So I think we need to start off very early with those discussions, because they need to progress into conversations that we have at later stages as well. You asked that question about money management, about money, and what are the big myths or the
Mental
big
blocks.
mental blocks that are there about money. I think money management, the biggest one is that investments are very difficult. It's a big bogey. It's too esoteric. But I can tell you myself, I manage money. It's not rocket science. money management, investments is not rocket science, and there's a lot of information and a lot of data out there. The first thing we need to do to break that mental barrier and that block is actually to read up a lot. There's a lot of information available on
Correct.
different topics and different aspects. So I think that's one big mental block that is actually out there in terms of what money is all about, and how do you invest and how do you manage money. The second one, and I think women traditionally have managed the household budgets, and they're very good at doing that. They're extremely good at saving. But when it comes
Correct.
to investments, we've seen that money generally tends to lie, in the tijori locked up. So it just increasing our cash in circulation, or it gets invested in more traditional, fixed deposits or gold. And somehow sometimes it finds its way in the informal lending market. And to be frank, you need to be a very astute investor to actually lend and be able to do your due diligence, not in the way that we talk about it in the financial aspect, but actually women are doing that due diligence to try and assess whether, if I lend to this friend of mine, will she actually be able to return that money to me, and when we are lending in the informal markets. But I think moving away from just saving and moving to having an investment mindset is also very important. So these are a couple of these mental blocks that are actually available out there.
Okay. All right. On to you, Lavanya. Your own experience. You head up a large organization, manage money for the organization, like many many women across domains and sectors do. Right. What has been your own journey with managing your own personal finances? And give us a sense from your experience on what were some of the early steps, or what were some of the baby steps that you took, right? And that led up to you becoming more sophisticated in the way you manage your capital, manage your investments, manage your money. Because you have to start somewhere.
Agreed, Saina. Hi, everyone. Pleasure to meet all of you here, and it's a very interesting topic actually for a Saturday afternoon. So about how women can manage money. A little bit about myself. I'm a chartered accountant. Very very early in life, I had interest in say the finance aspect. Kind of was
Right.
very clear after 10th that I will not go the science route. I wanted to go the commerce route. So some of that kind of came more out of interest, where I was like, I used to sit with my dad, handle money. My earlier introduction to all that came from the family. So for all girls, it obviously comes first from the family. My dad used to kind of involve me in all the discussions, whatever he used to do, or small investments, what he used to do. So from there, obviously the interest got developed. But what I would say is that I would just answer your question more in terms of what I kind of follow also. One thing what all women should do is actually to have financial goals set for themselves. In terms of most of the women don't have financial goals set. It is very imperative that you set financial goals set for yourself. So it's my, like, if I'm making this kind of income, what should I save, what should I invest, what should I spend? Matlab, finally happiness comes only in spending. So it's about what you kind of do. So having financial goals set is very very important. And this you should start early in life. Say I want to own a house when I'm 30, like I want to own a car when I'm 25. So whatever, in terms of the financial goals, what you
Whatever
need to have.
floats your boat, right? Whatever makes you happy. If it's an Ivy League degree,
Whatever
it's an
makes you
Ivy
happy.
League
Yes,
degree.
finally linking it back. So if you say you want to have something to invest back to your kids, say I want to contribute to my kids education, I want to do this, so start planning towards that. That's the first thing. Second thing, what I have always done is I have drawn up my own balance sheet, my own net worth. I actually track. So people do investments, but then they never see a consolidated report, like how much have I done in real estate, how much have I done in liquid funds, how much is that what I've taken in form of insurance. So it is good to actually drop your own balance sheet. Being a finance professional, much easier for us to do it, but it is important to really know your net worth and what's the gap you have and how are you going to kind of bridge it. Also kind of helps you to see what kind of investments you can do, what kind of risk you can take. Like, can I do an equity, or should I do a debt? What percentage is something which I should do? Or if it's a long term, can I do it through insurance? So it helps you to take those decision making. And once you get into it, I feel once you get familiarized, it becomes easier for you to do it also. Okay. The third thing what I see is that you have to participate in the decision making. Like, if in the house they come and ask you when they buy gold or when they buy real estate, you are obviously very actively participating. You have to do the same thing when they invest in, say, the financial stocks and all that. You can have a form,
Got
you can give your opinion, right, in terms of what it is. So I feel just doing these things. And also, it's not like men know it all. Okay, they are also learning in the process. If you can participate in the journey, they'll be more than happy to kind of take your view. See, why do people want diversity? We should be kind of offering diversity into this also. This is my thoughts on this.
Wonderful, Lavanya. I think some very practical, actionable things that women can think about to do for themselves, no matter what stage in their personal or professional lives they are. Shruti, circling back to you, right? I think, and Lavanya brought this up as well, so did the other speakers, is on the aspect of literacy or education, right? I think sometimes what takes us aback is, not understanding the terminology, switching on a business channel and it's jargon, jargon, jargon. Open, the newspapers, and again, like, the headlines or even the body text is full of, heavy words that we might not understand. And then, you feel like, okay, I'll find some other time to do this. And then that other time never happens. So give us a sense of some very practical resources or ways in which you can go about educating yourself, picking up the right pieces of knowledge. What's a good simple way to start?
So, as Lavanya mentioned, investing, making a whole view about what you want to do with your money is very, very important. Simple things, pretty much everyone, a lot of information is now available on the internet. They're talking about mutual funds all the time. They talk about health insurance, how one is better than the other. You know, postpay does not have to have medical tests. There's enough information out there. Read the fine line and understand if it's really for you. Certain things which government policies are, which are standard, straightforward, very, very less risky, and does not require too much of in-depth knowledge, but gets your money working for you, like the postal savings programs, your PPF, your EPF. uh, it's safe, it's enough information out there. You can exit it when you're buying a home, or after 3 years, 5 years, whatever you need. It is a voluntary program now, which is great. And in terms of learning more, I don't follow the stock market myself as much because don't have the time. And so for me, mutual funds work very, very well. Just understanding there are enough debt funds out there. Talk to your friends, talk to people who are active. They'll be able to tell you based on your level of interest and knowledge that 12 months debt funds are good for tax saving, or 12 months, do you want higher liquidity, less liquidity, you're
Correct.
thinking from long term perspective. Just talk to a lot of people there. There are enough people. Even if you don't understand the jargon, try to find someone you can co-invest with, someone who's picking up a deal on a life insurance. Say, what else are you looking at? Do the test together, you and your partner. When he's doing a term insurance, do it with him. you know Jointly you can do a lot more research.
Immerse
and
yourself in it, right, rather than trying to watch from the outside.
and trying to do everything yourself. What I'm trying to do is, don't try to do everything yourself. There's always something more out there which you haven't read. So when you have someone, two minds reading the same thing have better results. So try someone you're co-investing with. Find friends who have similar interest and the same age bracket, similar, children with the same age group,
Nice
or a partner
choices.
like that. Yes. So I would
Correct.
say make it part of your conversations rather than thinking about going on the internet and reading about it and getting more confused. So that would be
Yeah,
my suggestion to anyone.
right.
There are lots of tips
I
out
think,
there. Just
yes.
talk about it, make it part of your natural conversation. How will you talk about a new restaurant? Try to talk about a new investment tip.
Wonderful. Yeah, wonderful. And yeah, the internet can be a rabbit hole in that sense, right? And Deepika, actually perfect segue to you because, you with Bases actually look at and manage a large community of women investors, right? Give us a sense of where you've seen those aha moments happen in your community. What are you have now kind of distilled as, some of the 4, 5, 6 steps that women need to take to then feel more accomplished and empowered to manage their finances.
Sure. I think so. While Shruti was talking about just consuming content, also, right? I think what we find as a challenge when it came to women and we were building out our content was the fact that here's a woman possibly working, running a home with kids, etc. She has 10-15 minutes in her day to learn about money or to spend time on her money. Maybe 10-15 minutes is also an inflated number, but how do we make use of that time for her to make her feel like, hey, in this 10 minutes, I learned like one new concept which is going to help me tomorrow or possibly like at a later point in life when I want to make a decision with regard to should I even withdraw my PF, right? Like
Yeah.
these are small questions which you'd be surprised that women don't know who I should ask, right? What's the process of like withdrawing my PF? I've been thinking of doing the Sukanya Samriddhi Yojana for my daughter. I don't know how to go about it, right? These are things you think that, oh, we all know or most of us know, but like Shruti was saying, these are very natural conversations when a group of men get together. They're talking about the next stock, they're talking about crypto NFTs now, they're talking about like real
Yeah.
estate investments, but chances are even we when we get together with our women friends we're not talking about money because that topic has just been taboo for far too long. And even choices like health insurance, right? This was literally like this morning we had a young girl, 23-year-old, message us and say, hey, until you all told us like at Basis, I didn't know I need a health insurance of my own, and I'm diabetic and I'm on insulin. And even then I didn't understand the need for this, right? And my thought just goes to the number of women in the country who are unaware of something so basic and probably don't have resources to trust. Yes, there's someone at home guiding me, there's a bank manager, etc. But I think the problem is that we've not felt so comfortable. And I think moments happen every day. Like literally that message this morning, as bad as I felt about her health situation, was heartening. Now she's covered. Like for a hospitalization, she has an insurance in place. She's not going to have to dive into her investments or savings for it. And like much like what you all were talking about earlier, right? Like investing is not rocket science. The challenge happens when you invest, which is possibly buying an insurance or buying a mutual fund or any other investment, and then try to figure out what role it plays in my life. Versus like working the other way around, like where Lavanya was talking, like just establish context to why you're making investments, right? Is it for a year? Is it for 3 years? Is it for 10 years? Is it matching or meeting some financial requirement of mine? If it's
Goal.
not,
Right.
yeah, if it's
Yeah.
not, then maybe I need to rethink it. Because literally now I have people write to us, oh, I have these three insurances. I need money for this. How do I withdraw? Versus like, oh, I could have needed the money 3 years later. I should have planned it like in a mix of a debt fund or a balanced or whichever approach.
Right, interesting, and I think a good segue to something we discussed earlier. We touched on it briefly, but I want to come to Lavanya, Sunena with this. Sunena, we talked about women who take career breaks, right? Which means that they've had a career where they've been earning their own income, and whether it is because of family needs or just because they need to take a break for caregiving or what have you. During that time frame, right, I think if you know that you're going to be on a break for a few years, if you already know that, right, or if you kind of have an idea of you are going to get back to work, but right now you want to consolidate and use the income that you have or your savings, how can that be better managed? What have you seen in your career that you can talk to women about?
So I think a couple of things, and I go back to what Deepika and Lavanya were also talking about, and that is, you start planning your investments and your finances very early in life. So maybe from your first paycheck itself, you start planning, and it has to be goal basis. It cannot be, okay, I'm spending so much and the balance, is my savings, and then, you just, invest it in a rather random manner. It has to be done on the basis of goals. So goals could be short term in nature, our expenditure that gives us that thrill, that little bit of jewelry or that car or anything, planning that holiday, or it could be long term in nature. Buying that house, maybe planning for some expenses like your own marriage, your child's education, your retirement, etc. But I think women also need to factor in, when they're planning and when they're looking at their finances on a regular basis, the fact that at some point of time they actually may have to take a career break. It could come earlier on because you're looking at something like childcare, or maybe later on because of parent care, or for any other reason also. You may just want to plan a sabbatical, take a 1 year off and do things that you were not able to do up till now. But I think it's important to try and plan that out, while it may not actually work, always it may not actually pan out that way. But at least you need to plan for it early on, that there is a possibility that I may actually take a career break, and for that I need to have that emergency funding in place. I need to have an emergency savings in place, and I need to ensure that the savings that I have can be stretched over a longer period of time, even though I may not have a regular income at that point of time. So you need to, I think, plan in advance that there is a possibility that there may be a career break at some stage. So that's one. Secondly, I think it's also important that even when you're planning for that career break, if you're able to plan it in advance, you make your investments in such a way that it matches your risk return profile for the period of time that you're potentially on the break. And you can do this just like the way that you do for the rest of your portfolio, goal oriented. Maybe take help of a financial planner to help you actually plan that. But also, more importantly, plan your insurance, your health insurance, your life insurance, etc. Also, because that should then cover the period where maybe you're not earning and you don't have, you can't fall back on, let's say, a company healthcare policy, which otherwise you may have had when you're working. So I think these are the things that women need to keep in mind. But most important also, I think women need to spend time to invest in themselves and keep on investing in themselves by continuous. And since we know we're limiting this conversation to investment, I think they need to keep on reading up a lot about investments. And you know Shruti mentioned that there's so much information and data out there, but I think even during a career break, women need to continuously invest time in not only continuously upgrading and upskilling their skills for whatever their path is and their career is, but
Yes.
also keeping abreast of what is available in the investment field. There are a lot of things, that keep on, products keep developing. You've got newer asset classes. Deepika spoke of cryptos and NFTs, but you need to be continuously keeping abreast at all points of time.
Right. Okay. Rounding up to you, Lavanya. And as we head towards the close of this session as well, keeping in mind, everything that we have heard of so far on this panel, there is one more point that I thought we should perhaps touch upon is, there is a very real gender pay gap. Women do earn uh, less than men for whatever reason. Having said that, we tend to be more risk averse. I think studies have now validated this, and might also largely dictated by personality types. But yes, women tend to be more cautious and risk averse. In that, with that framework, Lavanya, if you can speak from your experience like you did earlier, give us a sense of what could be a good mix to start with. How can we be more assertive at work as well as with our own finances?
See, while yeah, there is something which is more natural to us is obviously we are risk averse, but then you can train yourself to kind of see how you can take calculated risks. Okay, one of the things what I really want to mention, and I think so we have all the other three panelists who come from a real financial background, who are actually helping all people to create wealth, right? One thing what all of us should do is actually seek professional help, in terms of how to better our investments, while how much ever you read, okay, but I feel to explain what your goals are and then seek out help, like the other three panelists, they are in that business, so it is important they know what is kind of happening in the market. I would be more than happy to speak saying that this is my goal, and how do you kind of reach out. So I feel asking help is one of the very important stuff which all women should do. I think so we are not that networked, and all of them had kind of highlighted in one or the other way, but how do you create that network for yourself where you get that information from others, like what is it happening, if it's crypto, what is happening in crypto. Like I've been speaking to people, like what will digital currency really do for us, like what is it going
Yes.
to do for us in form of an investment. Our FM really made an investment saying that we are going to go on digital currency. Can we do those investments upfront to get the benefit up? See, you look at all these things from a corporate, for your companies you do. Why can't you just apply the same principles to yourself also, saying that can I make a little bit more money by probably investing ahead of time, so that I'm kind of covered. So it also takes time to develop that, okay. One of the very few things my dad did very early is that he took an insurance, and the first paycheck he said, from now onwards you'll pay the insurance. How you pay is your problem, but this insurance I have paid till this date, from now on you'll start paying it. So it's about how you inculcate that habits also, in that. So I feel seeking professional help, talking to people, creating that community, read the forums. Also in internet you read, there's so much of it. Sometimes it's better to stay away from internet and actually ask the right questions to the right people. But you have to be conscious and also monitor your investments. There might be times when you have put in money, say in mutual funds, but it's bleeding, and since you're not looking and you didn't exit at the right time, you made a huge loss, right? And definitely you don't want to be explaining loss. So it's about whether you monitoring the investments also become very, very important, at the same time. I
Okay.
feel asking, really being aware is very, very important. And the same thing comes to it actually, when you're informed, I feel the other person will also kind of look at you, saying that, yeah, like she knows her stuff, right? So they're not going to take you for a ride. So I feel it's important that way.
Okay, all right. Thanks a lot for that, Lavanya. I think we have just about 2 odd minutes on the clock. So I think what we'll do is one last round, and perhaps if you all can give a one word or a one line or one phrase answer to the question, what money means to you. I'll start with you, Shruti.
It means financial freedom
All
for
right,
me.
Deepika.
Power. Yeah, it's a ton of power.
All right. For you, Sunana.
A means to an end.
Okay. And to you, Lavanya.
It's an opportunity.
Wonderful. I think, in that, I think we have summarized the last 40, 45 minutes of this conversation, right? Money is empowering, money provides us opportunities, it's a means to an end, and it gives you power back in your hands to take control of your life if for whatever reason you have lost control of it. On that very wonderful note, I want to thank all of the speakers for joining us this afternoon, and I hope for all the audience that is watching and listening in that this was a useful conversation. And
सपनों की तो बात ही कुछ और है, कुछ अपने और कुछ अपनों के। अपनों को तो हम अच्छी तरह से जानते हैं, पर उनके सपनों को मेरे घर वालों को ही देख लो। साइकिल चलानी नहीं आती, लेकिन अनमोल को सुपर बाइक चलानी है। पापा तो बड़े ही क्यूट है। मम्मी को कभी डेट पर नहीं लेकर गए, पर वो उन्हें पेरिस ले जाना चाहते हैं। मॉम ने अपना सारा टाइम हमारा करियर आगे बढ़ाने में लगा दिया, पर अब वो अपना खुद का होम बुटीक खोलना चाहती है। इनके तो ठीक है, पर मेरे सपनों का क्या? खुद की रेस्टोरेंट चेन खोलना, अनमोल को सुपर बाइक की सवारी करवाना, डैड को उनके रोमांटिक ट्रिप पे जाते देखना, मॉम का बुटीक बिजनेस सेटअप करवाना। इसलिए एक SIP अनमोल के लिए, एक पापा के लिए, एक मम्मी के लिए और एक SIP मेरे लिए भी, क्योंकि सपनों की तो बात ही कुछ और है। तो अलग अलग सपनों के लिए अलग अलग SIP क्यों नहीं? अब हर सपने को पूरा करने की तैयारी कीजिए विद मल्टीपल SIP। कुछ अपने सपनों के लिए और कुछ अपनों के सपने पूरे करने के लिए।
An investor education and awareness initiative by Aditya Birla Sun Life Mutual Fund.
म्यूचुअल फंड निवेश बाजार के जोखिमों के अधीन है। स्कीम संबंधी सभी दस्तावेजों को ध्यान से पढ़ें।
Good afternoon, ladies and gentlemen. It has been an action packed day today where we witness a spectrum of solutions from our panel and experts as humanity as a whole relooks at everything from existing to investing. As we continue to seek common solutions to the shared concern, welcome to this panel titled Narrowing Down on the Pulse of a Young Millennials and Their Investment Patterns. But before that, a little bit of a context on what this generation is all about. Frequently dubbed as an instant gratification generation, millennial is a name given to the generation for those who are born from 1981 to 1996, also known as Generation Y because it falls in between Generation X and Generation Z. This generation gains the name also because they were born near or came to the age during the dawn of the 21st century, that is the new millennial. As the first to be born into the digital world, members of this group are considered digital natives. Technology has always been a part of their everyday life. Millennials often see their career trajectory and retirement differently from how their parents lived, saved, and spent. As such, the relationship between money and millennials tend to be complicated. Notwithstanding this, there's a growing body of data which indicates that millennials are in fact quite financially savvy, as opposed to the reputation created by the deluge of internet memes showing millennials perpetually struggling with money. So, with millennials being the TG of interest to every sector and business as they form the most potent age group or customer type, especially in the context of investing, saving, and spending habits, this panel seeks to decode the generation as the investors category. Without much ado, let me introduce our esteemed panel for this session. Today we have with us Mr. Varun Sridhar, CEO Paytm Money, Mr. Nalin Bansal, Chief of FinTech Corporation and Initiative NPCI, Mr. Avinash Polpali, Director Consumer Category Head Clear, and Mr. Bhavdev Bhatt, Head Retail Sales at Aditya Birla Sun Life Mutual Fund. Welcome, gentlemen, to this very, very interesting show. While we are almost in the conclusive day of this very, very interesting day, I think we'll make sure that we give the ROI to all our viewers by way of content and intelligence that we are going to generate. Welcome so much. So, as we begin, I want to draw a parallel, and that will be your first opening comment to also understand your stance on this topic. So, the parallel that I'm going to draw is between the years that we are seeing and millennial as a generation. So, as we know, the 2021 was the most difficult year, and 2023 is going to be the endemic, hopefully. And 2022, which has happened to be the year, is smack in between these two years. And the parallel I want to draw is with the generation, the millennials, who are smacked in between the generation X and generation Z, while when it comes to their investing habit, they look towards inspiration and learning from the previous generation, but they also sway towards the generation Z, which is absolutely different from the previous generation. So I want to start with your opening comment on how do you define this generation, what are the uniqueness of this generation as investors, as a starting thing. We can start with the same order of as we got introduced. Over to you, gentlemen.
Um,
Yeah.
should I start?
Yes, please.
Yes. So yeah, just to set the context. I think I mean whenever there is a new of a generation, the that particular generation defines how the needs for themselves are going to be, and with those needs and with those demands comes a completely new age of discovery, where which could even lead into the way people probably invest in their financial instruments, probably do their consumer spending completely differently, probably save in a completely different manner. And I think with millennials, it is no different. You were talking about Gen X, and if we go to Gen X, and if we go to a little older generations like um, um, baby boomers, etc., they had changed the pattern of what their previous generation was. The investing patterns had completely changed. So a lot of people in Gen X went in and started investing in internet stocks. Previous generations of baby boomers were the first ones to, after a long period, to adopt to equities. And the generation before that were completely invested in commodities, and you could see gold rise to extent which probably would have never witnessed post that. So it's the same with millennials, and you can see that millennials are sort of now adopting to a lot more digital tech, and things like cryptocurrencies are becoming a norm with millennials. Indians have almost about 20 million people who have invested in cryptocurrencies. 95% of them have made that as the first asset class of investment. So, uh, and the oldest millennial today is 40, and the youngest is 20. And so the both in globally, whether you take US or India, the number of millennials are huge. Like in India has 440 million people, and in US is almost 96 million people. So each of these countries has almost one third of the millennials taking a decision which they are comfortable with, which they may probably want to break the chain of rules that have existed from the previous generations. And you are going to see that going forward. The next 10-15 years is going to be something that drastically changes the existing business. And as the existing business change, it definitely will change the financial world, the instrumentations where people invest in. So all this is going to take will have a new look. And this is only going to this is only exploratory, and this can only get bigger and bigger.
Yeah. Varun, you want to go next?
Yeah, I can. Hey, good afternoon. I think we more often than not, when we look at millennials, I think we have a hypothesis on who they are, right? And the fun is, I think they are river rafting, right? They are making their own. I think they are defining the sector, the industry, the trends more than what the industry is. And I'll explain to you why that is happening much more than what I would call in my generation, right? So at Paytm Money, for example, we have majority of our investors are actually young people, right? Less than 28 would be 55, 60% of my consumer base. Now, those customers, those users, they have their way. So they are doing asset allocation much earlier than what we imagine. So for us, we think, oh no, they are risk takers, they are doing this and that, but they're actually very mature. They think asset allocation is important. So, for example, they would have a large cap fund, they would have an international fund, they would be very experimentative of an ETF. So, what ends up happening is on one side, asset allocation is much more stronger and brilliant. The second thing, their knowledge and awareness is far higher than what I was when I was a 25-year-old, right? So, they are very good on expense ratios. And we had this fund manager meeting once, it was really funny. There was this young 22-year-old who literally quizzed the fund manager on why your expense ratio is more than that X fund, right? Now, this is not normal. And I think that's the beauty of this generation, where driven by information, driven by access, what we are trying to teach asset allocation, he's doing. We are trying to say, or she's doing. We are trying to say disciplined investing, they're already doing. So I think the industry has a challenge now, right? And the challenge is as follows: as a distributor, which we are of direct mutual funds, or as a manufacturer with Aditya Birla is, I think the challenge is this consumer segment's demands are 100x of where we are today, right? And I think we try and stereotype them and try and produce reports on them and saying they're like that. But the truth is, they're changing much faster than the industry is. Their ability to know is much faster. And I think that's where there is the topic of the equity business being so big. That's where there is the topic of trading. We talk about crypto, blockchain, but all these investors are doing that. They are also graduated to NFTs and buying property in metaverse, right? And if there was a fractional investment available in metaverse, they would. But I think it's maybe time for all of us to stop stereotyping them but to actually start listening to them, because that's the future customer, that's the future revenue pool, and that's the future driver of our country, right? And that's why I always keep saying this, but the next 10 years of the wealth tech business is going to be the most crucial and the most defining movement of the sector.
Yeah, I think I'll just, I agree with you, and not only for this sector, but any sector which is servicing this generation and the next, because they're an outcome of knowledge economy. They will never take your stance as absolute. It has to be because they've, as it is well read, they know everything. So they will only take your advice only when you make sense, backed by data and intelligence, which they don't have, which is not provided for in the www. So, so yeah, Nalan, you will want to go next.
Yeah, no. So I was just thinking about the context that you shared with all of us, the 2021, 22, 23. And I have, of course, all of you know about investment more than anybody else. But it's our view of how we see payments at NPCI. Um, for us, this disruption has happened more than once. During demonetization. Of course, the first year of pandemic 2020, the second year of pandemic 2021, and now 2022. Um, uh, because of the technology intervention, I think both payments, investments have, I think, come up with variety of models. So there are a lot of options now being generated, both for the millennials. I would say now even Generation Z, and in few years' time we'll have Generation Alpha also coming in. But just saying that a lot of models have been created. And if you specifically ask me, this year would be, the way we see it is more of year of consolidation. We're already seeing that in the capital market. Um, uh, the winners, the ones that who have really worked hard on building the right products, getting the right segment, are consolidating. Ones who have not are possibly struggling. So I think this will be a year of consolidation. And um, just one behavior that we tend to see, that the experimentation possibly is going to plateau at some point in time, and the generations are going to move towards buying their loyalty to something. So I think interesting time this year, that all the experimentation should settle down to some models as we speak. In terms of investment trends, it's very difficult to say from a payments point of view what is that money being spent on. But yes, there's a lot of interest on crypto as an investment, option. Surprisingly, the traditional modes of investments are out of the way. I don't think property investments are, as I would say popular as they used to be. Um, uh, I think it's all come down to a lot of small ticket investment items, and then building up a portfolio that gives them a single view, and that is seen in apps like Upstock, Zerodha,
Yeah.
Grow, Simple. All of them are going to sort of give you those options, and not to forget GPays and Phone Pays and Paytms, who are converting from being just payment apps to investment apps. So I just feel that a lot of that single view picture will emerge, and then more of micro investments will come up. So that is one
Yeah.
view.
Yeah. I think, yeah, it's everything is being rebooted, and this generation believes in rebooting often, to make themselves smarter, sharper. So this is no less. So Bhavdev, your initial words on this, please.
Yes, Archana, thank you. So I think how are these millennials in terms of the generation different from the prior generations? I think the term millennial investor itself is representative of that. I don't think the generation before or generation prior to that, for example, would have thought of investing or started investing in their early 20s or mid 20s. So I think that this millennial investor as a phrase itself is very refreshing to kind of hear. In terms of how is this generation different, generally speaking, I think it's the generation which is fast and furious. They are the ones who kind of are really open to new experiences, new experiments, etc. As I think Varun mentioned, they are going to be extremely demanding in terms of the products and services, whether it's differentiation or the experience itself. So I think in that sense, there will be a different response system which will have to evolve as a set of manufacturers. But to my mind, yes, it's very nice to kind of see a generation which is thinking that investment is cool.
Yeah, indeed. So thank you so much, and this helps us to set the stage for more deeper question, more specific ones. So Avinash, you work with the global millennials as a part of your profile. uh, I really want you to tell us how are they different or similar to the Indian counterparts when it comes to investing and their choices.
Yeah. So when you talk about millennials, right? What we have observed and what you generally see is that there's two distinctness. There's a generation of older millennials when you take from age 33 plus, and there's a generation of very new millennials, younger millennials in their 20s. And you would have generally seen the older millennials have sort of followed their previous generation. So you would see the same patterns in both globally as well as India. And in India, the older millennials have used to invest in real estate, properties, probably have had this have some investments in FDs, etc. And same in US, the older millennials followed their generation of passive investing and all that. But what has happened now recently, and that's what you're seeing in both in India and US, is the new age millennials are there's a lot more globalization, and to some extent the Indian millennials have sort of outdone or are outdoing what the global millennials, younger generations, are expecting.
Mhm.
So you would see the investment diversification in younger millennials, like the other panelists spoke about, is very high. So people are not just looking into equities, they're looking into cryptocurrencies, they're looking into investing in different forms of real estate. There are new debt instruments that have come up, because the new startups that have innovated new debt instruments for millennials to invest. There's new startups who innovated fractional investment in real estates, etc. So you'd see that the Indian millennials have sort of outdone their global competitors, and this is also to a large extent supported by the government, where technology has been a huge driver. And you can see like the adoption of UPI and other things in payments, etc. And similarly, what SEBI is doing with wealth tech firms, you see that the adoption of Indians have outdone their global peers, and this trend is going to continue. And you see that the asks and the requirements for Indian millennials is something that you have to innovate in India. It's just not something like the previous generation did, where you could copy paste from US and you could launch similar business models. So that's a
Right.
very different change, and that is something that is coming out of India. And probably fintech, wealth tech could be something that India sets as a benchmark for global ecosystem to follow.
That's a very interesting thing. I also believe that investing and being self-reliant financially is also part of our culture. So that has a lot to do with probably why Indians are millennials and youngsters are ahead of the curve. So Avinash, my question for you is: what are the uh, pitfalls that this generation faces? Because, like Avinash said, there are a lot of diversified portfolios that they are dealing with, and now with digital asset coming in, what are some of the pitfalls that you think are there, and so that they can avoid, and if we can articulate it?
Yeah, is the question for me?
Avinash, yeah.
Me? Yeah.
Sorry, for Bhavdeep, sorry.
Okay. Yeah. Sorry,
Yeah,
I got that.
sorry.
Okay, yeah. So I think the in terms of pitfalls, the only pitfall I can see right now is the hurry for making quick money, or that need for instant gratification. That is the only pitfall that I see. But before that, I think very importantly, as Albert Einstein had mentioned once, that compounding is the eighth wonder of the world. And one of the most powerful components of for compounding is the time in the market or time of investment. And I think by starting investing early, millennials have got the most powerful factor or element of compounding by them side by their side. And to that extent, I think it's something which is very powerful. uh, I mean, it might just look like a daddy talk, but what's very important for the fast and furious generation is to make sure that you don't really lose control on your vehicle and on yourself. And that is the most important part that they need to kind of figure out in terms of where do they invest and how do they invest and with what expectation do they invest. Because ultimately, really knowing that investing is all about it requires really patience and time, and it's not something which can really multiply returns over a very short period of time. Because as much as power of compounding is important and powerful, the negative compounding works even at a more ferocious pace. Meaning, if you have invested 100, and if that money becomes 50, then you need 100% return to go back to your principal. So compounding is extremely powerful, and negative compounding is even more powerful than compounding itself. So to that extent, again, let me quote Warren Buffett's famous quote that to generate long-term wealth, there are only two rules that one needs to remember. One is don't lose money, and second rule is don't forget rule number one. So to that extent, just make sure that in the chase for instant return and substantial return in a very short period of time, you really don't put your principal at risk. So that is the only pitfall that I would kind of outline for our millennial investors.
Okay,
Archana, do
talking
you mind
about,
if I
yeah,
do
yeah,
you mind if I step
absolutely,
in?
absolutely,
Okay.
absolutely,
I just wanted to add a few points. I think, sorry if I do that,
absolutely.
but I think the millennial investor does something very very well, which is taking calculated risk, right? So we were talking to these colleges, and a few days back I was talking to this ISEC event in Gujarat where we had, I don't know, some 300 odd youngsters, 90% of them investing, and many of them customers of both mutual funds, equity, ETFs, digital gold, and doing a bit of future and option trading. And one of them put it very beautifully, saying, our parents used to advise us don't lose capital, right? And if I, and that's exactly, keep your principal protected. But they say, hey, look, right now my principal is small. I want to protect 50%, no problem. So I understand that I have to do SIP in a large cap fund. Perfect, because it's the right thing to do, and I need to stay super disciplined, right? I need to make sure bang on my SIP hits. Then I have this 30% that I want to, I can't lose it, but so I go and see, does somebody like Aditya Birla offer an international fund, maybe a mid cap fund, maybe a balanced fund, and they try and experiment, right? So you'll see average number of funds and schemes youngsters have is 3x of somebody at 40, right? So, the number of schemes they have is unimaginable, right? Number of transactions they process with me is unimaginably high. But once that's done, then the last 20%, they're very happy. They're saying, look, you know what? This is money that I've earned. This is my risk capital. If the 20 goes to zero, no problem. If the 20 goes to 100, I've learned an important lesson both sides, right? Whether I win or lose. And I think that's what is changing. The problem is, I think we try and say, we should, because they are already very advanced, right? I think like my parents had to teach me Varun aap SIP karo. So I've been doing SIP, I don't know, since 2005 or 6, right? So I'm no old SIP consumer. But they never taught me, hey Varun, why don't you do futures and options trading? Why don't you do an ETF and try and buy in the same day and sell? That generation wants to do it. The best part, what I like, is they learn, and I think that's a big change. I think our generation, learning was not in school. We never learned. We were not taught. So our learning was baptism by fire, right? They have a great tool called Google. They have all this technology helping them, and I think that's where the X factor kick in. Is some of them are investing in learning, and the ones who are, I think they are making a huge difference to pushing the sector and pushing each of us. Yeah. So I just wanted to add that. Sorry to
No, no, this is interesting. And in fact, my next question is to you, Varun, that we are talking about the pitfalls and also the way the millennials think. So, do you think with the easy availability of loans and credits, it becomes a pitfall for this generation, and they get into the debt trap? What's your view on that?
I'll take my own example, right? When I was millennial, that time it was not so cool to be a millennial. Back in my days, I think I come from a fairly lower middle class family, professors who never thought money was important, right? Who gave me great education, but financially, all my life I've been working negative. So I used to take loans to live my life till a point where the ratios got balanced, right? But for a long period of time, it was not the most sorry, did I get disconnected? Yeah, for a
No,
long
you're,
period
you're
of time
audible.
it
Yeah.
was very so for a long period of time it was very tough, right? And then I had to live my life a bit ahead of myself because I like consumerism, if you may, in a positive way. And I wanted to have my television, my bike, my home much before my savings could get me there. So I did borrow, right? And I did leverage, so to speak. I think Generation X today understands what leverage means, right? So if you look at India, with all the consumerism present, we have one of the highest SIP success rates in the world. Okay, minus all the payment issues that come. Right, I'm a payment company and I have somebody from NPCI sitting here. So minus all the payment issues that happen in between, our SIP discipline success rates are fantastic. What that also means is this young person understands the value of leverage for the right thing. Our regulator is fantastic saying don't leverage for loans, don't leverage to do trading. But if you go and ask the young person, say, is leverage good to buy a bike? He will tell you that the bike gets him faster to live his life better or to get a better salary. Or if he buys a mobile phone today, which is more expensive, we call it as binge spending. If you ask that person, he's actually trading, so he needs a better processor and he's gaming and making his money. So he or she, I think so. So I'm not so worried about young India, honestly, because I think they've come from great values of our parents, who essentially told us save, 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 be disciplined, and that's why we come from a conservative, non-American society kind of thing. America is very consumerist, right? But India is not, and so I'm very confident that the right amount of loans, right amount of leverage is great. Obviously there's a pitfall, some people get excess leveraged, but I think those cases are few and far between in India, thanks to the regulator, thanks to Indian parents, and thanks to the way our economy and social structure is. So yeah, but I have a lot of hope and faith on young India. They're fantastic, they understand it. I was not like that.
Absolutely, and I think all of us agree on that. So, Nalin, because we're talking about forward-looking ways of investing, and with the budget all announcing 30% tax on cryptocurrency, how do you see that shaping up the future of investment for millennials and the next generation?
So before I get to that, I wanted to bring in a concept that Varun was talking about. Uh, See, while all this shift is happening, and I completely agree with him, the confidence level in generation now and going forward is super high. It's also the purpose of investment. Generation prior to that was investing primarily for security, for safety,
Yeah.
security, and then there were those reasons therefore the asset class was defined. But I think the generation now knows that security is not too much of a concern, and a lot of investment choices they are making more for experimentation, for exploration, which is why we are seeing some exotic choices out there, including crypto. So I think, and like Varun explained, with portion of that being secured, a, a significant portion they are now looking to experiment with. So I think that's driving a lot of those choices. But going back to what I said earlier, I think they're settling down in some zones, and I can draw a parallel from a payments point of view. We've seen most of the young generation not wanting to carry a card anymore. Um, for them, it's too uncool to carry a card or flash a card. Imagine how it was 15 years ago. We would die to get a card from a bank or from an issuer. But today they just don't want to. I mean, if you can't pay it by mobile, the merchant is uncool, not them.
Yeah.
So I think that's the shift. Coming back, see, I think we don't necessarily get involved in crypto trading, and I think payment organizations are basically waiting for more regulatory, uh, uh, I would say, insight and then clarity. on how this asset class or whatever it is going to unravel. There are many other things that are happening. There is CBDC that is planning to come up. Um, so I really believe this is just one way of saying that something that we don't know, let's at least tax it so that we know what's happening where. Will it impact? I don't think so. I mean, if people are crazy about crypto and they want to invest in crypto, the kind of gains that it has given to market, I do believe that they will continue. And these are longer term investment. You're not doing 3-day trading, 5-day trading, 10-day trading. So rules can change tomorrow. So I don't think this is going to be a major impact. People will, if they're invested, they'll stay invested. If they're not, they may still. I don't think people are going to exit anytime sooner.
Yeah.
But yeah, I mean that's broadly what we believe should happen. But we are very excited about CBDC. We believe that it has the ability to bring everything digital. Imagine having cash being digital. You don't need a bank account to do so. Money sitting in the bank, you don't need that. So so I think that's
Yeah.
something very exciting that we're looking forward to.
It's truly a digital native coming alive in the environment that they are most safe and secure, and they like to operate that way. So Bhavdeep, since we're talking about the cryptocurrency and that's the talk of the town and the nation, uh, how do you see it as a long-term investment, and what's your experience and what's your punt on that? Given the fact that it's still new, and like he said, that maybe those who are investing, they'll continue to invest. Those who are never for the favor of that will not. But with a little bit of legitimization of cryptocurrency, how do you see it shaping up as a long-term investment asset?
Right. So I think first of all, it's very important to get the context of what is really an investment. So investment is something which yields you, some return if you hold that investment. So for example, if you invest in equity and if you're holding that equity share, you at the end of the year, mostly you get dividend yield. Uh, a dividend essentially. Okay, if you invest in real estate, for example, you get some rental. If you invest in bonds, you get some interest rates. Investment is something which has some inherent feature of holding period return, right? If you hold it, you kind of get some return at the end of some frequency, 6 months, 1 year, whatever. Now, when it comes to cryptocurrency, first of all, my experience is that I have never invested in that. I have been kind of as a curious market participant. I do track that, but I'm not a subject matter expert in that, and definitely not an investor so far. One interesting statistic I would like to bring to the conversation right now is that if you look at the history of the foreign currency which becomes a global standard, for example, which is US dollars right now, in last 600 years, almost every 100 years, roughly around the same time, the global currency has changed. So we don't know whether cryptocurrency is going to be the next one replacing US dollars, or remaining even side by side with US dollars. So we really don't know the future of it. All that I know for all the cryptocurrency enthusiasts is that if you're investing just because next month is going to be double, or mostly next week or maybe tomorrow is going to be double, don't get there, because no investment like that is something which really sustains. So the future of cryptocurrency, I don't know, but I know one thing for sure, that for long term wealth creation, it's very important to really understand that investment is a game of patience. It's not a game of instant gratification. As long as I think Varun mentioned, it's a very important point he brought, and which is the asset allocation. Now, it might sound a bit tacky conversation for some of our millennial investors, for some of them maybe not. It's very important that as long as you are making sure that your investment in I would say that I would kind of put a word to speculative investing like cryptocurrency, and that is so for me, maybe not for it's mainstream for someone else. But for me, if you are investing in cryptocurrency, just make sure that it's only a small part of your overall investment portfolio and not 100% part of portfolio. Because what we often don't realize is that we look at 10,000 rupees today, or okay, 1 lakh rupee today. What's important to say is that if you make a right investment choice, and if it were to compound at the rate of even 15%, okay, that becomes a 8 lakh rupee investment 20 years down the line. So essentially, it's not a 10,000 rupee bet you are taking. It's a 8 lakh rupee bet you are taking, which would have which is lost today. So I think just have that moderation. Keep at the back of your mind the fact that no investment which kind of returns or is likely to return 1x, 2x, 3x, 5x in short period of time really sustains over a long period of time. So create a robust portfolio across across equities, fixed income. Maybe you are very young, so maybe not too much of fixed income, but definitely equities, and through some decent portfolios, and also invest 10-20% of your portfolio into cryptocurrency. That should still be fine. It's a good bet to have for 100-year story that I just mentioned, and if it were to play out, you could really make a killing out there.
Yeah, I think very interesting points made. And I think as an investor, you have such a spectrum of options from cryptocurrency to, say, real estate and everything in between. So I think that's a very interesting era in which we are just getting into. Varun, my question to you is, real estate does not figure too prominently in the millennials list of investment. How do you see that, as if you have to advise them, what would be your stance?
More often than not, I get advised as compared to me advising anybody. As a distributor, I think real estate, you're correct, has lost flavor. I think for two, three reasons. First, everybody has a home to live in. And if they don't have a home to live in, I think supply demand in India is so much that you can find better accommodation. And I think what's happened in the last 2 years with COVID, work from home, all of that, I think real estate is further having a defining moment saying what does real estate mean. If you ask from an investment perspective, I think a bunch of REITs are starting to come. I was, talking to a few regulators. I think the whole REIT space is going to become exciting, and I think that's where the future fractionalization of portfolio is going to go. I'm looking at funds like Aditya Birla. I have a lot of respect for them to come in and say, hey, look, you come to us, we will help you manage the spectrum of very safe to real estate. Don't go and buy a 3 bedroom house, because I think people have done the maths on the 3 bedroom house. Like my parents forced me to buy a 3 bed, then a 2 bed, and I'm stuck with all those properties. And I'm like, dude, what should I do with them? The maths of that doesn't make sense even with a liquid fund as compared to what Aditya Birla would offer, right? So the maths, I think real estate doesn't make sense anymore. Our society forced us to have it because otherwise we couldn't sleep properly. Younger generation, doesn't care a damn about sleeping properly. They care about making their money work harder, which is the right thing to do for India and for us. So I think real estate has lost favor in the bulk transactions, also because capital is less, right? You need a lot of capital to do that. I think the next big thing on real estate is going to be fractionalization. And I know that the regulator is working on it, the Indian government is working on it. I'm confident that in the next 10 years, using ETFs, we are very bullish on ETFs, right? I think next 10 years in India is going to be all about asset management companies driving ETFs. I think some of the ETFs will pick up underlying real estate assets and structure something. The minute that happens, all of a sudden, I can be holding a 3 bedroom apartment ETF. I can be holding commercial property ETF. And then I can be holding that ETF for 100 rupees, selling it. And then if NPCI and Paytm Money get together, maybe I can buy a burger with that ETF, right? Because I'll scan my QR code and my apartment is going to pay for my burger, and it's instant redemption all through. And I think that's the future. So as we go into that future over the next 10 years, with companies like NPCI building great rails, with people like Aditya Birla doing great manufacturing products, and people like us getting to the last mile at the fraction amount, real estate, I think, will come back into flavor. But I think the industry needs to get that shock, and they need to wake up and say, "Hey, look, that's the future. Why can't we accept that that's the way business is going to be done?" And I think that's where the future is.
And in fact, just to add to that, Varun, REITs are already there. That's so fractionalization is started.
Yeah, no, REITs are there, but just so the fact is, I think many times I get confused as the I come before or the E come before, right? And that's the problem of a REIT. The problem of a REIT is it's too complex. The problem of a REIT in my mind is liquidity. We are capital market people. So I'll tell you 1,000 problems of what a REIT has, but I think it's a great start, right?
Got
I think the fact is REIT has got off to a great start. REIT is the answer, I hope between REIT plus ETFs, as capital market players, we're able to find that solution because real estate is necessary. Right? It's a necessary investment allocation for any millennials portfolio. The problem is what is the right way.
Right. I think it really is a Mahakumbh of policymakers, new age investors, tools, and the day and the time that we live in. We spoke about real estate. We spoke also about cryptocurrencies. Avinash, I want to talk to you about stock market. That's one of the hot segments for this generation. What's your viewpoint on this?
Yeah, I mean, on stock market, see, most of the there's a spur in new investments, mainly in stock market because of the access. The digital access has tremendously increased. Like 10 years back, when I wanted to start on stock market, it would take me 4 days to open an account, a demat account. Today, it takes me less than 5 minutes to open a demat account. So there's huge spur of investments in stock market, and when you say stock market, also there's various other instruments that are added into this basket of digital access. Like Varun and Nalin was talking about fractional shares. There's a new set of investors who are saying that I mean I don't want to invest like a 1 crore to buy a home, but I'm okay to do like a 1 lakh. Give me a share of that. And you see that a lot of people have still not adopted enough to debt markets and mutual fund debts and bond markets yet. But they are sort of adopting to all the new age products that are coming in, and where they have better information access, where they understand the product much deeper than what the current debt and bond market the way they structured the current debt and bond market. So you would see that the people are taking this to they are asking for current age products, and the more product innovation comes in, the more adoption comes in. And we have seen that in digital gold, we have seen that in cryptocurrencies. As soon as the product innovation, the access comes in, it's not taking a lot of time for millennials to understand that and adopt to it right away. So yes, so stock markets has just been a spur in the moment currently, and but we see that the millennials are they start off with stocks or cryptocurrencies as first, and then they start moving into other assets very soon.
Okay, so we have very few minutes left. So my question to Nalin is that, and I would want Baba to also add his comments, that how has the pandemic changed, shifted the investing habits of this generation very quickly?
Uh, not, not sure I have the right answer for it. But there's one category that maybe we have not spoken about, and that is gaming. And I know it sounds really
Yeah.
crazy that gaming is an investment or whatever it is, but in the last 1 year, our topmost merchants used to be oil marketing companies, e-commerce companies, but suddenly we've seen a lot of gaming websites and gaming merchants coming up in the top 10 list. Um, I don't know, maybe it's a habit generated through the pandemic, but there is a lot of purchasing happening on gaming. And then those points are sitting there, those coins or whatever they call it, those are sitting there in those gaming zones, and they are being there are options to even trade. I know my driver, he spends 1/4 of his salary in one game where he buys a lot of coins, and he tries to build it up, and then they even share it between each other. So I'm just saying that uh, that's a certain behavior change that we've seen. And of course, like everybody spoke about the digitization of investment, at least in the capital markets, I think is has certainly picked up. Um, let's hope mutual funds also go that way once they start getting traded on the exchanges.
Yeah. Now, Bhavdev, you want to add to this? You're on mute.
Yeah, one interesting thing is that SIPs have grown, and SIP discipline, or the expiry ratio has come down immediately after, I think, first 3-4 months of lockdown. It remained, but I think over time it has expiry rate of SIPs has started reducing, and number of SIPs have gone up. So which is very interesting development to see during this pandemic on the investment side. Yeah.
Yeah. So with this, we conclude this session. Thank you so much, gentlemen. And as very quick summarization, all of us, all of you have been speaking about how nothing is absolute, nothing is. We need to create new patterns. We need to relook at investment in a newer form with newer realities and a newer avatar. So thank you so much. It was a great conversation, and thank you for participating. And now I will lead it on to Gautam for the concluding session, and have a great day.
Thank you so much, Archana. Indeed, a very interesting discussion. And the key message seems to be that younger investors would like to go boldly where no one has gone before. But a bit of sense and a bit of sensibility goes a long way in making sure that they reach their destination. It has truly been an exciting exchange of ideas from a galaxy of industry leaders, financial advisors, and subject matter experts as part of this mega event. I would like to thank everyone who joined us for sharing their valuable nuggets of wisdom at the Nivesh Mahakumbh today on a plethora of topics ranging from shaping our financial trajectories in 2022 to the takeaways from the union budget to the retirement investing puzzle and how it can be solved. We hope these insights will propel you towards a better financial future. And of course, thank you to our viewers for tuning in today for this exciting collaboration between Hindustan Times and Aditya Birla Sun Life Mutual Fund. Now, before we call it a day, it is time to announce the winners of the social media contest on investor awareness that was run across HT's social media platforms as part of Nivesh Mahakumbh 2022. Now, the first two winners will get Amazon vouchers worth 1,500 rupees, and the next three winners will get vouchers worth 500. And there you can see on your screens the names of the winners. Vinita Dinesh Chandra, who gets a voucher of 1,500, and so does Arun Kumar Srivastav. And the winners for the 500 rupee voucher are Akshay Parismita P and Thea Marva. Congratulations to all the winners of the contest. And before closing the proceedings of the day, here's also a teaser of season 3 of HT Friday Finance, a slice of life fictional series that revolves around the lives of three friends and their conversations around their jobs, relationships, future plans, and most importantly, finances. Now, this series is created in partnership with Aditya Birla Sun Life Mutual Fund, so do take a look.
मेरी तशरीफ में मोती जड़े हुए जो प्रॉमिस है बहुत ज्यादा हंसी आ रही है
Giving you a girl's perspective, digestion का super base और bass का प्रदर्शन मतलब
और तेरे बच्चे भी हैं खुशी खुशी झुनझुना बजाते रहेंगे
we might have to redesign your sherwani.
आ गया 14 के 14 बॉक्सेस वार्डरोब है वार्डरोब यार
सुप्रभात
Lessons in Finance on HT Friday Finance. Do remember to watch that show. But for now, thank you so much, ladies and gentlemen, for joining us today on Nivesh Mahakumbh 2022. We hope you've had a great learning experience as it's been for all of us. Meanwhile, we hope that you have a great year ahead. Take care and have a great day.